tapped into my inducement high POI, price was traded away, and we've left a nice high internal high, which was my trap high. I wanted the 30 second to get even more clarity. I saw a nice imbalance. And then I just set my limit above here. I targeted, where do you think I targeted? Of course, the equal lows. So it was about just under at 8R. I think it was about around at 8R. Price tagged in, played around for a little while. And that was my 8R trade. How did I get that narrative though? Let's go through it one more time just so you can get a deeper understanding of this. What's happening, family? Hope you're doing well. So in today's video, I'm going to show you why it's important to react to the market even after you've initially predicted what may happen. All right. In this trade breakdown, what I've got here is gold, a trade that I took a couple of days ago. It was about a 7 or 8R trade. And it's a trade where I'm going to show you one of the losses that I took in the market before I took a great win. But I want to show you the importance of why it's important to stay flexible. But on top of that, I'm also going to show you how I get my narrative and how I work out, if it's best that I take a trade on a lower time frame basis, or we maybe take a trade that I can hold throughout the day. All right, but you're going to see this all in the trade breakdown right now. So what I've got here right here and now is gold. Okay, this is the 1 hour time frame. As you know, this trade was about a week ago, 22nd of October. It is now the 28th of October, so almost a week to the day almost. All right, so this is gold at this time. All right. I put in a chart on the beginning of that day, Wednesday, 22nd of October. And people often ask me, Roms, how do you get your narrative, your context of the market? And I like to start on the 1 hour time frame. I sometimes go higher to the daily or the 4 hour just to get a glance, but the 1 hour gives me enough data more often than not. So straight away, what I can see here is price here, if you look carefully, has swept this high. All right, so this high here has swept the high to the left. All right. So that's an inducement of the high. So as prices aggressively traded away now, what else can I see? Okay, if I look at this price action down here, this is not random, all right? So I see this here, I can see prices swept the low, moves higher, and it's created liquidity here. And as it's done that, prices come back lower, taking out this internal structure, induced to the low side, moved higher here. So it goes higher, higher, and higher from here. And what else does it do here? What else am I seeing? So I'm also seeing that this may actually just be a bullish channel. You guys know how much I love my channels. All right. So that's what I was seeing at the time. A nice bullish channel, an inducement high of that channel, and then an inducement of the high itself, and then aggressively trading away. But what do we have here as well? We've also got this low of the channel that I've marked out that's been induced or swept by this wick during Asia on the previous day. All right, so make that a bit thicker. So you can see here, so you look at this now, you're like, is this an inducement low for price to then go higher? Is that the case? I don't know, let's see. So now we drop down to the 5-minute time frame. What do we see here? Same sort of thing, really. It just gives us a bit more clarity of what took place. So you can see here, liquidity, inducement lower, and then price moves higher, all right? So this is about 7 a.m. This is Frankfurt Open at this time. So if I just play on 4 seconds, cool. What's nice about this? So what we see here, nice. I didn't take this trade, by the way, but this is what did happen. Price induces to the low side, and then we have to move higher, right? So what does price do? On the way up, it creates a nice channel. There's definitely been cleaner ones, but again, it's still a nice channel. And then price induces the high to the left, as you can see. Clean as, inducement higher. And then we get a nice sweep of the internal highs for the price to then trade a bit lower. Cool. All right. So that's that. That was London Open. All right. And this is where it gets a bit more interesting. It's when I wanted to get involved into the trade. Now, I've gone to the 1 minute because I was primarily on the 1 minute on this day. What was I seeing? Let me give you my point of view. Remember what I said? I believe that this initially was a sweep of the major bullish channel to the left, right? Remember? And then this was a nice inducement lower, I believed, of this channel. So I was like, okay, we've induced lower now, and we've taken out a structural point here. All right, so we've got a nice structural inducement here. I'm like, okay, maybe from here on, we may decide to go higher. So let's see what happens and play it out. And I'm going to show you the actual trade that I took cool. This is it. So this is what I saw at the time. Okay, the way price playing out. We've got an inducement lower, structural inducement, and I see this low being, you could say, mitigated by this low here. What else do I see? I see that trend line build up. I see that price has taken out this as an inducement high of the equal highs, and I saw this as enough of a low of an inducement to then potentially give me an entry here. Then I'll take this to the high side to then maybe take out the highs. My first target at least being here. All right. So this is what I was seeing at the time. Remember, at the time, price was super bullish. All right, super bullish here on gold. We're at all-time highs. If I look at this, bullish as it gets, right? So I was thought maybe we'll just continue that. If I go out to 1 minute though, you will quickly see that I was wrong. Cool, losing trade. All right, simple, losing trade. I know, like, I don't often show my losses on here. Usually I show the winning trades, but I do take losses as well. A lot of them. My win rate isn't like 100%. It's not even. It's probably a bit less than, or around between 35 and 50%, depending on the week. However, my risk to reward, as you guys know, is very high or decently high. So it's enough to make me extremely profitable. All right. So cool. What do we say here? So this was a loss. All right. Loss. Cool. But you saw what I was seeing and why it made sense to me at the time. All right. But so that was a loss. I'll leave that there for a second. I'm going to delete this though. And let's watch price play on. So this is when I had to start getting a bit more, you could say a bit more flexible about what's going on. I'm sure, guys, I'm going to delete that. It's just getting in my way. Cool. So if I delete this as well, now I'm like, okay, so this inducement low did not hold. So that means that does price want to come down to this extreme? Maybe it does, maybe it doesn't. But this is what I was trying to work at the time. So I was still bearing in mind though that this was liquidity that was looking like it could be forming. All right. So equal highs were taken. Price came lower. Initially it respected this low here, but it only respected it briefly. What did it respect it for? It respected it and it created a bullish channel. And then, whoa, it's a bit of a mess. Cool, so it respected it higher to then just mitigate this high to then go lower, all right? So that's what all price was doing to go lower here. That's all that was, all right? Cool. So now I'm even more interested, okay? Now I'm thinking, now we're in New York, all right? And I'm gonna show you guys what I was seeing and how I got involved, all right? So now I was like, okay, what do we have here? Let's go into the 5 minute for a second to give you guys the picture so you guys can really understand it. We have an inducement, like I said. Let's work on the 1 hour, in case you've forgotten already. An inducement of this bullish channel, all right? And then price has moved higher and it's induced to the high side though, as well, of the internal liquidity. Here, all right? So you've got two inducements. You've got inducement down here, you've got inducement up there. Then it's like, okay, which one's going to win? And this one you have to just, you got to work it out depending on the cycle and what the hard time frame is doing. But in this instance, I saw, as I had already taken that loss, but I was still interested in getting involved in the market. What was I seeing now? Remember, this is the extreme of the inducement low. But what was I seeing now? I was seeing this. Look at these equal lows being created. All right, I like the look of that. I like the look of the equal lows. I saw this final push up still as a valid potential point of interest, as a potential strong high because it had induced high to the left. Okay. So I'm like, okay, there's liquidity down here. Prices created these equal lows and prices moved higher, respected the high to the left here. It's come back and it's induced these lows inside to then move higher during New York Open. So if I press play, Let's see what happens. Cool. Price finally goes higher. All right. Right. What does it do? It moves higher. It doesn't quite take out this high, not quite, but it doesn't even get into the zone here. All right, this imbalance, so it gives us a false reaction from these highs, comes lower, gives us a nice inducement of these lows, then it moves higher, and then we taps into our high that we was looking at, all right? And this is when, again, I was interested. Why am I interested? Because I was seeing what I love to see, guys. What does Roms love to see? Hopefully you guys know this by now. I love to see my channels. And I was seeing this as, okay, it's not the cleanest one, but it's still a valid channel. I saw this as a channel, liquidity being formed, but not the only thing I had a valid high to be respected, although I didn't typically trade at this, but this is an inducement high, all right? And then I saw the equal lows as well. This is why I was interested. So I could have, if I wanted to risk it, just set a limit here to then trade lower, all right, for 6R. However, I wanted to get a reaction first, and that's what I did. And then I even went on to the 30-second time frame. I'm going to press play. Cool. Right. 30-second time frame. I'm going to go back for a second. If it lets me, yes, it does. Just for the sake of refinement, first of all, what do we have? Build up, equal lows, build up. Bullish channel, build up. Inducement high of the structural point to the left, vector candles, tapped into my inducement high POI, price was traded away, and we've left a nice high internal high, which was my trap high. I wanted the 30-second to get even more clarity. I saw a nice imbalance, and then I just set my limit above here. I targeted, where do you think I targeted? Of course, the equal lows. So it was about just under at 8R. I think it was about around at 8R. So I'll keep on the 30 seconds for a second. All right. Price tapped in, played around for a little while. All right. And then played around, and then price eventually. And what does price do here? Nice inducement higher again to fool people to believe this is a break of structure. No. Just an inducement higher to then continue lower. And that was my 8R trade. How did I get that narrative though? Let's go through it one more time just so you can get a deeper understanding of this. I took a loss over here, remember? It was around, let's call it here. All right, so a loss over here. And then that was when I believed, okay, maybe, price could come and take this low here. Maybe this isn't the final inducement low. Maybe price still wants to go bearish because we had this inducement high up here, and we had my trade attempt here that failed, and then price came lower. But what do I always talk about, right? It's all about the liquidity. It's all about the cycle, understanding the build-ups. People ask me, how do I get my bias, my daily bias, etc., etc. Where's the liquidity? Where are the build-ups? And I took a one loss here, an 8R trade there, easy as that. And that's why you have to stay flexible. My first trade was a buy. My second trade was a sell, because I took the information that I had in front of me from the data that appeared throughout the day, and then I adjusted it accordingly. All right.